seem to make any difference, though. Is it okay? Is it 3 now? Check it out.
Welcome to the show. Jason Bible, Texas Real Estate Radio Network. Exciting times out there in real estate land. I will tell you, someone asked me a question, and then I go out and look for the data if I don't have a data source readily available, and then just magically, all the data appears out of seemingly nowhere. I think Rob and I have gotten to the point now where there's a term in finance called front running, and essentially what it is. Front running is taking information which you've got before anybody else and getting in front of the crowd to trade. It's not necessarily insider information, but it's pretty darn close. You'll hear it called front running the market, front running. Zero Hedge, they do like a morning daily post, and they call it front running. Tuesday's front running, Wednesday's front running, all the stuff that's supposed to happen today, some market predictions, that sort of thing. I think Rob and I have got the news cycle beat by about 2 weeks. So a friend of mine reaches out to me and says, "Hey, Jason," I can't remember where, it's Facebook Live or a speech I was given somewhere or something. And he says, "Hey, well, I think it's really starting to turn into a buyer's market out there." And I said, "There is no economic indicator out there that says we are turning into a buyer's market." Now, if you're new to real estate and you're wondering what's the difference between a buyer's market and a seller's market, really comes down to two things. Are prices appreciating or are they depreciating? Meaning, are prices going up or are they coming down? That's really all is it a buyer's market or a seller's market means. Are prices going up or are they going down? Now, what's funny is when you start to read some of the national data, it says, well, housing's slowing down, there's less houses on the market. The problem is that when you make broad sweeping statements like that, you miss out what's really going on in the marketplace. And I will tell you my theme for the last almost 2 years now. If you think real estate is expensive now, just wait. If you think real estate's expensive now, just wait. I'm being sent Class C apartment deals at $100,000 a door, and nobody's batting an eye at it. I'm amazed at the deals I'm seeing that are being bought in Westbury that have been flooded multiple times. We have a crisis in this country. We have a real real estate problem in this country. And I'll tell you right now, it's not a crash. It absolutely is not a crash. There is no crash a-coming. This morning, pulling up my articles to read, just going through a couple of different sources. Somebody had posted a really interesting comment by the team that is managing Fannie Mae and Freddie Mac. They're still in the conservatorship. And he posted an article, it was a lending related article as it relates to discounts for bulk purchasers of mortgages. And I'm reading it. I'm like, okay, yeah, this is kind of like mortgage news. It's fine. Rob and I are reading a lot more mortgage stuff lately. So I'm sitting there reading the article, and then I was like, I'm going to go with their homepage. What do they got on their homepage? So I click over to the homepage, and this is one of their lead stories. Oop, hold on one second. Here we go. Redfin, it's becoming even more of a seller's market. It's becoming even more of a seller's market. And the article goes in to explain what submarkets across the country are experiencing massive growth. In other words, price appreciation. And the fascinating thing is all of those markets that are dominated by affordable housing. I think it's kind of funny they mentioned Tacoma Washington in there, and I've been to Tacoma a couple of times, and they consider that an affordable market. Well, for Seattle it is, but the rest of the country it's really not. But the places that are the quote hottest in real estate are those that are affordable. I'm looking at an apartment deal right now. We do ground up construction. We buy, I don't know, let's call it a dozen acres. And then we would build garden style apartments. And the conversation I was having with the commercial broker yesterday is what is our target for this asset class? It's not Class A. We're not building a 25-story tower and charging $3,000 a month rents. Because I can tell you right now, I'm getting those deals. I'm seeing the Class AA stuff hitting my desk. Hey, Jason, this is we got a whisper price on this, and here's the whisper price. And, it's kind of listed with a broker, kind of not. It's on the market, but not really on the market yet. We don't want anybody to know we're selling. So if you could keep this one under your hat, that'd be great. That's what I'm seeing in the Class A market space. Class A is the really nice stuff. They're the office towers. The way I describe Class A real estate, especially on multifamily, when you walk onto the property, it feels like a resort. You walk in and go, this is nice. This is really nice. That's Class A real estate. Class B is Class A real estate that's 10 or 15 years old. And Class C, at least here in Houston and most of Texas, are these little 2-story, 3-story garden-style apartment complexes. That's the asset classes broken down as kind of simple as possible. So now we're having conversations about building Class C apartments. We had a lot of conversations about what are the demographics in that submarket. Do you go in with little duplexes and quadplexes and triplexes, or do you actually build, the U-shaped garden-style apartment with a pool in the middle? Maybe you do 2 U's and there's 2 pools. I don't know. We haven't really decided yet. We're probably going to pass on the deal. But I find it fascinating that the discussion now is affordable housing. And that's what that Class C asset is. When we host a bus tour and we take our brand new mastermind members or our club members or folks that are buying real estate from us, when we take them out to these neighborhoods and they walk these properties, now, granted, we will look at some distressed properties. The first thought comes to mind is, well, this isn't really, this is a little bit different than the house I live in. Well, of course it is. We're building affordable houses. We're building affordable real estate. $1,000, $1,100, $1,200 a month rents. We're not going into Westview and Memorial and buying a $400,000 house and renting it for $5 or $6 grand. That's not the model we operate on. There's a handful of reasons why that's the case. One is the exit strategy. I was looking yesterday just for grins. I was looking at the price point where I think is most vulnerable. And that's the $500,000 to $750,000 price point. For $500 grand, you could live in just about any neighborhood in Houston, except 2. Well, if you start getting into townhomes and condos, you can. But for single family houses, you can live just about anywhere for about $500,000. That's both a good thing and a bad thing. It's great for buyers because you can pick just about any neighborhood in Houston, Texas you want to live. By the way, our median home price is $250,000, $300,000. Well, $250,000 and our average is $300 and some change. So you can live just about anywhere for $500 grand. It gives you a lot of choices. Now, when you get to $150,000, your options shrink real quick. That affordable house. Where are the affordable houses in Houston, Texas? If you read the HAR report, you can see houses below $150,000 have virtually vanished from the marketplace. Does that mean they're not selling? No, it means that they've appreciated so much that they're no longer $150,000 houses, they're $200,000 houses. This is one of the reasons why we are in small multifamily. Duplexes, triplexes, quadplexes, 10 units here, 15 units there. One of the reasons we are in that market space is because we recognize that affordable houses are disappearing. So if you're buying a house that's valued at $200,000 and it rents for $1,600 a month, that math won't work long term. The house will continue to appreciate. Your insurance will increase, the taxes will increase, all the flood insurance, everything gets more expensive as your house appreciates. So you might not be able to hold on to that house for more than a year or two. However, small multifamily that is typically dispersed amongst other single-family houses provides a huge advantage for you as a real estate investor. As those houses appreciate, renters get pushed out of those markets. And what it does is it puts pricing pressure on the small multifamily. We hosted our event Friday, the landlord, we ought to call it landlord workshop. That's really what it turns out to be. It's we sell properties there. It's over at Seasons 52. We do it once a month. We'll have 2, 3, 4 properties that are available for sale. And one of the things I brought up, I pulled the MLS data up for rental comps in this neighborhood. A couple of folks in our group have a handful of duplexes under contract in this neighborhood. And the duplexes were at market rent, which was about $1,050 a month. However, all of the single-family houses in that market started at $1,300 a month. So the question I keep asking everyone is, how much longer do you think the rent for the duplexes is going to stay at $1,050 a month? At some point in the future, those little duplexes will be $1,100, $1,200, $1,300 a month per door, and you've got 2 doors for the price of one. Get back from the break. We're going to talk more about sellers versus buyers markets. Jason Bible, Texas Real Estate Radio Network. Man, it is cold in here. I think the problem is I stand right underneath this.
They can move microphones.
Yeah.
That's easy.
Since 2014,
Is it better over here?
Open Helpline has helped people struggle
I gotta move all my junk.
Yeah. That's strong.
We help people when you give a call in, it feels good. It's a blessing. If you're struggling, drinking, using, and need to get clean.
Look at that. Robert Orfino's posting.
Whoa.
Our people understand, and many are also in recovery. Call for support and strength. You can call for someone who can erase it. It's an act of love. Together we can help you beat this thing and erase addiction from your vocabulary once and for all. Call 800-670-4459. 800-670-4459. 800-670-4459. Writing a
1
Christian
minute.
book, you're doing an amazing thing, getting it all down on paper. But once you've got the manuscript,
What's going on, Jeff?
well, you can spend a year or more trying to find a publisher, or you can cut right to the chase. Make your book real with Zulon Press. Finding a publisher is time-consuming and uncertain. With Zulon Press, things are quick and definite. They specialize in one thing, helping Christian authors put their books in print. Zulon Press will publish your book. Zulon Press gets it into bookstores. Your book is on Amazon. Work with Zulon Press, and there's no question you are a published author. If you're writing a Christian book, get your free publishing guide from Zulon Press. Just log on to ChristianPublishing.com. That's ChristianPublishing.com. Zulon Press.
10 seconds.
Publishing by Christians for Christians. Get your free publishing guide at ChristianPublishing.com. Zulon Press is a division of Salem Communications, the same people who bring you this nifty radio station.
Rick, no Led Zeppelin today? Since Rob's not here?
nasty note.
We'll get he'll start calling. Although home price gains remained relatively modest in August, supply and demand are now heading back towards sellers' favor. Redfin chief economist Daryl Fairweather said. That's a great name for an economist, by the way, Fairweather. Home sales are accelerating as buyers eat into a diminishing number of homes for sale. Now, the question is, where are those homes? What price class is diminishing? And the article goes on to say, anything in an affordable market, in an affordable housing market, however they deem affordable based off, what the average income is or median income is for that submarket, for that neighborhood. Anything that's affordable is sold quickly. It's the lower end part of the market that is moving rapidly. And I'll tell you why this is important. Those of you who are landlords out there know this. As your property, let's say you bought an A-Leaf 5 years ago for $100,000, that house is now $150,000, $180,000, $190,000 house. Rents, at least in the foreseeable future, have not kept pace with price appreciation on the houses. So your house went from 100 to 150, 180, 190. So did your taxes, so did your insurance. Your mortgage stayed the same if you had a 30-year fixed rate mortgage. Heck, I'll tell you the folks that have been killing it, the ones that, if you bought with an arm like 8 years ago, that thing is adjusted to about the basement at this point. You hear a lot of people talking about 5-1 arms anymore because as rates decline, they've done really well with them. Anyway, so as these houses have appreciated in value, so has their costs. And rents haven't quite kept pace yet. It's definitely a great time to be a buyer. We've had a couple of folks ask in the Mr. Texas Real Estate group on Facebook, hey, should I buy a house to live in right now? I mean, interest rates they're not at all-time lows, but they're going. They're going there, I think. I can't wait to get a 15-year mortgage at like 2.5%. I think we'll get there. It might take another 6 to 12 months, maybe 12 months, but we might be there. And the Fed took another 25 bips off the board last week. And I don't think that's going to stop anytime soon. You've got to look at the rest of the world. The rest of the world's money is free or negative. The United States will head that way. 0% interest, 0% loan. I will predict in my lifetime, I don't know if it'll be in the next 5 years or 10 years, we will have 0% mortgages. And let me explain why. The houses are not getting more affordable. That's just the reality. We can't build affordable housing anymore in the United States. It's impossible. Too expensive to build houses, even down here in the South. It's gotten to the point down here in the South, we cannot build a new house for less than $200,000. So how do you make houses more affordable? Well, you start playing with the loans. One is remove the interest rate, which even at 4%, I just did a refi, is that last month? We refinanced on a 30-year at 4.125. I bet you can get that now down to 3.8, 3.9, somewhere around there. So one is removing the interest rate. Not much you can do about the principal unless the government starts paying people to buy houses. But the second thing you can do is increase the term. Go from a 30-year to a 40-year mortgage, which if they introduce these 50-year bonds, I think that is exactly what's going to happen. So now you've got a 40-year mortgage at, 2%, 2.5%. That does make houses, quote, more affordable on a payment basis. Most Americans are payment buyers anyway, so what they actually purchase the house for doesn't matter. What they pay per month does. And I think we will see that I know we'll see it in my lifetime. In the next 5 to 10 years, I think there's a 50% chance we see it happen. 40-year mortgages and 0% interest mortgages. I mean, nobody's making money to a certain extent. Nobody's making any real money on a 3% mortgage unless they buy it at a pretty decent discount. I think we will have mortgage companies, loan brokers that are literally just making money on the fees and then just moving the paper. Now, some people ask, well, how do you make money on a 0% interest? How do you make money on a negative yield bond? And that's outside the bounds of the show. But I will tell you, there are absolutely ways you can make money doing that. The point of the show is, what is the impact on real estate? And here's what I can tell you. If you think real estate's expensive now, just wait. There is nothing out there that's telling me this stuff's going to get any less expensive. Prices are rising rapidly. But I thought there was a recession coming. Yeah, I don't think it matters. I really don't. In fact, if we experience a little recession, I think there's just going to be more money in real estate. China, or as Trump likes to call it, China, printed $15 trillion. It's like 5 times what the United States printed in quantitative easing. In other words, expanding fiscal and monetary policy. $15 extra trillion sloshing around in the monetary system. Some of that, and we know this to be the case, has made it into equities. That's why the stock market is, quote, on fire. But that money's got to end up somewhere. And as things deteriorate around the globe, you will see more money funneling into commodities and real estate. And I'll tell you, if it comes into real estate, somewhere between 15 and 25% of that ends up in Texas. It ends up in our apartment buildings. It ends up in our office spaces. To a certain extent, into single family with larger portfolios. 100 houses here, 200 houses there, 1,000. You'll see a new fund that gets created overnight, and they'll go to the auction and buy 50 houses on a Tuesday. It's coming, folks. And it's about to get real expensive. Real expensive. And it's not the retail market going over to Memorial and buying, a 3.5 for $600,000. They're going into Katy. They're going into Spring. They're going into the flooded areas of Kingwood that flooded last week, and they're buying everything they can get their hands on. Because the money's got to go somewhere, and real estate's been a pretty darn good bet long term. We'll get back to the break. We'll talk more about the difference between a seller's and a buyer's market. It's Jason Bible, Texas Real Estate Radio Network. Man, it's just right there.
You turn it off so it doesn't blow at all.
Yeah.
Just up the temperature.
Yeah. All right. Let's see if that does it.
Down. I came in here this morning. It was 68. I mean, that's cold for me.
Yeah. Problem is that it's like you get cold, but you can't move, right? You're just sitting there. Yeah. Yeah, yesterday I was working at the house. I was getting all my tax stuff done and a handful of other things, and I was getting kind of chilly just sitting there. So I walk outside and I'm like, oh, this is awful. I'm go right back inside. When is this going to end? I swear it's August through September. Just I think it's the worst time of year.
It is. Always been. Yeah, I came in Sunday and I said to my wife, I said, this has got to stop.
Yeah.
I said, I'm out of juice.
Yeah.
I said, it's like 5:30 and I'm done for the day.
Yeah.
I said, I just walk outside. Even the dogs didn't walk out and come right back in.
It's the humidity. I keep looking. I'm like, when's the next cold front coming in? We got to have a cold front pretty soon here.
Yeah. All I want is 15 degrees.
Yeah.
Great.
If you guys could get my weather like SoCal, that would be great.
Oh, wow. San Diego, the perfect.
With the help of timeshare compliance can legally terminate, tear up, shred, eliminate, trash your timeshare agreement, ending your payments forever, saving you thousands. So whether you're looking for high-pressure design sales agent or you were
Yeah, that's right.
what you were buying,
Okay, 1 minute.
overpaid and they underdelivered, call Timeshare Compliance now for a free consultation. With one simple call, the trusted professionals at Timeshare Compliance can legally rip off your timeshare agreement and help rip off your financial suffering. You could save thousands. Call now before another payment is due. Timeshare Compliance is A+ rated by the Better Business Bureau. Call 800-319-1080. 800-319-1080. That's 800-319-1080. Someone you know may be suffering from severe emotional pain. Important signs to recognize include changes in behavior, hopelessness, acting withdrawn, agitation, poor self-care. Starting a conversation could save a life. Hello, I'm Congressman Michael Cloud. Look for these signs in those around you. Then, take a moment to show your care. Start that conversation today. It's brought to you by the National Association of Broadcasters and this station.
Welcome back. Jason Bible, Texas Real Estate Radio Network. Hey, we're hosting a loan document workshop this weekend. It's on Saturday. And what we're going to do is we're going to go through all of the steps and all of the stuff you need to have in order to qualify for a mortgage. And not just qualify for a mortgage, but present yourself, your financial self, in the best light possible to get the best terms, the best rate, the best all that sort of stuff. That's our loan doc workshop. And you can go to Texas Real Estate Radio Network, go to our Facebook page. It's on there as well. Or you can shoot us a text at 281-401-9008. And we'll be happy to reach out to you and get you signed up for that workshop. I don't know what the price is, less than $100, 40, 50, 80, but I honestly have no idea. But it'll be incredibly beneficial. I don't know anyone who does this. Rob and I were talking about this a couple months ago, and we're working with a bunch of private and public mortgage companies, and we're going through this kind of whole process. And we've got some of our club members that have done this a million times now. And we were chatting. We said, you know what? We ought to put on a workshop. Like, what if you were to go in and apply for a loan? It's no different than handing in a project for work or, let's say, in school. What does that need to look like? If you were to, for those of you who went to graduate school, what's your thesis look like, your dissertation, right? It's got to have a certain format to it. When you hand it over to them, what is it they want to see first? And the way I look at mortgages, especially applying for loans, is green check marks and red X's. And you want to have as many green check marks as possible. And if you've got a red X here or there, how do you best explain that so maybe it's not as big of a red X as it could be. So we're hosting that this weekend on Saturday. Just go to our Facebook page, send us a text message, 281-401-9008, 281-401-9008. Just say Lone Dock Workshop. So that's the Saturday. And today, of course, we're talking about real estate and the appreciation of prices across the marketplace. And I don't think it's going to get any cheaper anytime soon. I just don't. There's nothing out there that says, you guys got to go back to 2006, 2007. In fact, I'm working on a 3-part series right now on the housing crash. So it's all going to start with the series 1, the first in the lecture series is going to start with how did the housing crash start, like in the history behind all that. And then we're going to talk about what happened between 2007 and now. That'll be the second part of the series. And the third part of the series will be what happens next. And we'll be working with a handful of folks in presenting that. Most likely I'll be at Quest Trust and doing that as part of one of their series. But we're going to take this 3-part series and I'm going to break down how the housing crisis started, how it happened, where we're at now, and then what I think is going to happen in the future based off a lot of the data I'm reading. And I'll tell you, one of the things a lot of folks miss, a lot of real estate investors miss, is how much new construction took place between 2002 and 2005 into about 2006. Prices were escalating rapidly. At the same time, we were building a ton of new houses. In fact, you've heard me speak about this for almost a year now. The most important chart in real estate right now is the fact that we are down 40% since our all-time highs in building new homes. We are down 40%. In fact, I would argue we are probably maybe just above replacements. In other words, we're building a whole new neighborhood while other houses are being destroyed in the marketplace. Floods, fires, that sort of thing. Houses become uninhabitable just because of age. The reality is that we just can't build affordable houses anymore in the marketplace. So where does that leave us as investors? Well, in single family, you've probably got another 5 to 7 years. For those of you in Houston, take a look at the appreciation in Sunnyside. That is mind-boggling to me. I mean, the rapid pace of appreciation in that submarket is mind-boggling. That will happen for the rest of Houston. It's just a matter of time. You got to live somewhere. And if you got a job you can afford a house, even if it's a first-time home buyer, you're right at or below the median household income, you got to live somewhere. And you're either renting or buying. Can't couch surf the rest of your life. So where does that put you? Wherever you can afford to live. And as our inventory declines, meaning fewer houses available on the marketplace, prices will eventually rise. And they've been rising for the last 10 years. There is no scenario in which I see real estate getting cheaper, particularly in the state of Texas. Southern California, a little bit different. But here in Texas, I don't see this market getting less expensive anytime soon. So as an investor, we want to get in now and ride that wave of appreciation. And what's fascinating is you can buy a piece of real estate today that you can put a tenant in that will produce cash. It'll put cash in your pocket every single month. There's enormous tax advantages. You get your mortgage paid down by your tenant. But the real sweet sauce in this whole thing is the appreciation. What's it going to sell for when I finally sell it? I mean, we looked at submarkets in the last year that have appreciated over 10%. If you go out and buy a $150,000 house, you put 20% down, so you're $30,000 down, and that $150,000 house is appreciating 10% a year. You're making at least the first year, you're making 15 grand a year without doing anything. Pretty amazing. 50% return just on appreciation. We get back to the break, we'll talk more about single-family real estate. It's Jason Bible, Texas Real Estate Radio Network. Oh, here we go.
National competition for your business is eating away at your customer base faster than you can keep up. It's as if they have a back row of digital marketing minions swallowing your customers one by one. And it's not a pretty sight. What if you could beat them with your own minions? You need Salem Surround, a full-service digital agency with all your digital marketing under one roof. When a potential customer searches for your product, do they find your business or the competition? Is your contact information accurate and everywhere it should be to reach today's digital consumer? Does your website have all the right tools to turn visitors into leads? We've got some solutions. Contact Salem Surround for a free evaluation of your digital presence and to help get your message in front of today's digital audience. We'll help deliver customers by putting your business message in the right place at the right time. Don't just invest in a marketing strategy. You need to surround your audience. Learn more at surroundhouston.com. Surroundhouston.com. Connecting you with new customers. Know someone with a drinking or drug problem? Learn how to get sober after we share these stories.
I was 35 with two beautiful children when my life and addiction started to spiral out of control. After my divorce, I went into a depression cycle and started drinking more often and using prescription drugs. After my second DWI and arrest, my ex-husband threatened to take our children away from me.
I was 17 when I became addicted to heroin and meth. I thought I could quit on my own, but I couldn't. It hit me when I was arrested.
Get sober now. Your private insurance may cover costs and we'll get you here. It's simple. Just call Elite Rehab Placement right now. Please, don't wait. Your life matters to us. 800-819-8313. 800-819-8313. 800-819-8313. That's 800-819-8313.
Ooh, we got our Loan Doc workshop on Eventbrite. I just clicked the link. $47. You can go to Eventbrite and sign up there. Loan Doc workshop. We'll be at the Keller Williams Platinum office in their training room there on the second floor. It's at 1960 and 290, Saturday morning. So traffic shouldn't be bad. 290 right now has a very poor reputation for traffic. If you guys have been in Houston for more than about 10 years, remember how bad I-10 was? That was a nightmare. And then when they finally finished it, it's pretty good. It's not bad. I'm actually headed over to the office here this morning. But it's not bad. Now, here's a little, I'll give you guys a little pro tip. What happened after they finished I-10? And go back and look. Maybe you can have a realtor friend pull the data for you. Look at the amount of appreciation those houses in Katy experienced once they finished I-10. What do you think is going to happen off of all those houses off of 290? What do you think is going to happen to Jersey Village once they finally fix all that nonsense? Or the Copperfield, Middlegate, Copper Grove. I'm trying to remember the other couple of neighborhoods right there on the west side of 290 at 1960. All that stuff's going to start to appreciate because I'm telling you, because the traffic alone. Because right now, if you don't want to sit in traffic going up 290, you just say, you know what, I'm buying a house in Cypress, or I guess I'll go to the Woodlands. Although the Woodlands, geez, the traffic on 45 up there is insane. But I'll tell you, 290, it's going to be a good little play. It's going to be a good little play as they finish that up at all those properties up around 290. When they finish the construction up there. Same thing with 59. If you guys go 59 south past the Brazos, And there's that Richmond, I don't know what they call it. It's not a town center, but it's that big shopping area. They're fixing all that stuff on 59 South. Once that gets sorted out, I'll tell you exactly what's going to happen. The appreciation is going to push right on past Sugarland. Sugarland is not. Sugarland's getting to the point now where it's not really that affordable anymore. It really hasn't been for the last couple of years. I'd have to look and see what the median home price is in 479, but it's no longer really that affordable. Great Wood's appreciating pretty quickly, and so is Telfair and some of the other neighborhoods there in Sugarland. So people are being pushed out to Richmond and Rosenberg. Well, the traffic down there is still kind of a mess because they're fixing 59. Once they get 59 fixed, I can tell you exactly what's going to happen. You're going to see over the next 12 to 18 months, houses appreciate outside the norm, simply because people are like, well, I could drive another 5 or 10 minutes to save $20,000, $40,000, $50,000, $100,000, and the schools are comparable. That's absolutely what's going to happen. You'll see it in Cypress off of 290. You're going to see it down 59. I'll also tell you this. I think Richmond Rosenberg is that's a little secret down there. Probably shouldn't say anything about it on the radio, but it's a sweet little market. I also like all the stuff down Highway 6. Shh, I'm giving away the secrets. Look at the appreciation in Alvin. That'll blow you away. And you're like, Alvin, where's that? Alvin, Texas. Just pull it up and look how much that submarket's appreciated. People wonder why we're in Surfside. I go down to Surfside. We'll be down there Wednesday. If y'all want to help us out doing Airbnb stuff on Wednesday, send Rob a text, 281-401-9008, 281-401-9008. But I go down to Surfside and I look around and I'm like, there's no more land here. I mean, there's land, but there's really no more land here. There's no national chains on that little island. But when you're going over the bridge from Freeport to Surfside, if you look out the right side of your vehicle, the boat facility, they have this gigantic dry dock boat facility. It is huge. And the boats parked out front, there's got to be, I don't know, a couple dozen of them. And if they're less than $1 million a piece, I'd be shocked. Well, what is all that stuff down there? Somebody's got some money down there. A lot of somebody's. But I walk around Surfside and I'm like, oh, this is ripe for massive appreciation. Absolutely massive. Now, I don't recommend trying to find these little hidden gems as a real estate investor. I think 99% of you guys out there and gals that are brand new real estate investors, I think you can go to Cypress, you can go to Katy, you can go to other parts of Houston Spring, that sort of thing. You can go and buy a house and buy 10 of those things, and they'll appreciate enough over the next 5 to 7 years to make you $1 million. There's no reason why they won't. I can tell you the couple of little houses that we still own down in Katy. They went from $110,000, $120,000, and I'm going to guess by a year or two from now, they'll be $220,000, $230,000 houses inside of 5 years. $100,000 a house. That is absolutely going to happen. We're in Edo, and I do not recommend. Well, I got a lot of questions Friday about investing in neighborhoods that are experiencing gentrification. In other words, the neighborhood's turning over, demographics are changing, a lot more money. Really, gentrification is a nice way of saying money's coming into a poor neighborhood. That's the easiest way to say it. The problem is that those areas of town, the houses typically require massive rehabs. And the other part of that problem is, if you're wrong about the gentrification, you just put a whole lot of money into a project that you will not get out anytime soon. So we take the gentrification game very seriously. The only way to take risk off the table in real estate is to pay less for it. The only way to reduce your risk in real estate is to pay less for it. So you just offer less. When I get into these submarkets that are experiencing gentrification, what's the amount of money I'm willing to risk to buy this particular asset? We had shared with y'all we had bought 9 units for $550,000. We're actually selling the last one right now, and once we sell that one, we'll start the rehab process, and we'll do a case study on it. We'll share all the numbers with you guys. But here's the problem. That deal busted out twice before. And I'll tell you, if you're standing on, we bought the corner of a block. And I'm telling you, if you're standing on that corner and you're looking at that asset, most hard money lenders and most experienced real estate investors wouldn't do that deal. It's just too much work. It's a very scary project. However, the most money is made when solving the biggest problems. That's true in any endeavor, not just real estate. So we're big fans of that market and a handful of other markets, but I don't recommend it as an investment strategy. I think for brand new investors, it's really easy to go buy a duplex and double the rent in a couple of years. It's so much easier to go to Katy or Cypress or Kingwood or Spring. It has really good schools, and you're $15,000, $20,000 out of pocket, and you make 50% of your money back just on appreciation the first year. That's a lot lower risk than going into these areas of town that are real rough and trying to turn them around. But when you get more experience, maybe that is something you want to do. Get back from break. We're going to talk more about affordable housing. It's Jason Bible, Texas Real Estate Radio Network.
Are you looking for that picture-perfect home in Clear Lake? You're being transferred and need to quickly sell your existing home. Consider Marla Lewis with Entourage Real Estate. Marla has over 15 years of
This can't
experience
be
in
right.
the real estate industry. And whether you're buying or selling a home in town or on the road, she'll work tirelessly to get you the best price with the best terms possible. Don't delay. Contact Marla Lewis today at 832-868-6091 or visit EntourageRealtors.com.
We've been fighting the war on drugs for a long time. We answer the phone 24/7, 365 days a year. On a busy night, we answer hundreds of calls. This war on drugs needs our intervention.
Since 2014, Addiction Hope and Helpline has helped people struggling with drugs and alcohol.
When the phone rings, we help people when they need it the most. When we get a caller into treatment, it feels good. It's a blessing.
If you're struggling, drinking, using, and don't suffer alone in silence.
I gotta send this thing in.
Our people understand.
Is it?
It's my watch.
You have a self-winding watch?
Yeah. It's
That's pretty antique-y.
Oh yeah, I love it. It's great. But the problem is every couple of years you're supposed to send them in, get them serviced. It's starting to lose time.
Is it an Omega?
No, it's a Sin. It uses a
I have an Omega self-winding.
yeah. They're great. It just you got to keep them wound. I didn't wear it as much as did I wear it yesterday? If you don't wear it for like 2 days, you got to get one of those little watch winder things for it.
Okay. Coming up on 10 seconds.
Visit pestworld.org. A public service message from the National Pest Management Association and the Asthma and Allergy Foundation of
Last segment.
America.
Welcome back. Jason Bible, Texas Real Estate Radio Network. There we go. Got one of these self-winding watches. I didn't know you had to send them in to get serviced every now and then, so I'm starting to lose time on it, which is kind of a bummer. So let's talk about time a little bit. How much time do you have? I can tell you this. I think inside the next 5 to 7 years, maybe even sooner than that, you are not going to be able to buy single-family real estate that cash flows in the city of Houston. In areas that are not scary. Let me put it that way. There will always be submarkets that you can, quote, invest in. So I've got a couple buddies that invest in Chicago. They call it Chirac because the areas of town they buy in that actually cash flow are absolute war zones. Houston will end up there. The worst areas of town will be the only ones that you'll be able to rent properties in. I looked at a deal in Austin, what was that, a month and a half ago? So I'm in Austin to speak at a Quest Trust event, and somebody had sent me a small, it was a quadplex or 2 quadplexes, something like that. Said, hey, why don't you go look at these? I said, oh, okay, cool. It says an Austin address. I get out there. That was a rough neighborhood. There's a difference between poor and rough. And I will tell you right now, you can go into neighborhoods here in Houston, Texas that are, let's say, well below the median household income. But the yards are kept up. You know, there's the streets aren't full of trash. I mean, you could just tell it's a lower income neighborhood, but it's well taken care of for the resources that they have. And I will tell you this, at first, you're not going to be able to tell the difference. It's too overwhelming for most people who are real estate investors, especially when they start out. They're used to their neighborhood. They go into some of these other neighborhoods like, oh my gosh, this is. But I could tell you that there is a big difference in a lower income neighborhood that is well taken care of with the resources that they have versus something that's just this kind of transient, broken community. And I've looked at a handful of deals like this, and I've been tempted to teach folks how to recognize this, but it's not easy. I can deal with a neighborhood that is below the median, well below the median, would be considered poor. But when you have a broken community, that's something you can't fix regardless of price. And so the reality is, if you're not going to get into real estate as soon as humanly possible, meaning like this year, next year, those will be the areas of whatever city you're in, you'll be investing in. You'll be investing in broken communities. And it sounds really attractive to go in there and say you're going to turn it around. The reality is you just can't buy enough houses to turn it around. All right, guys. Rob and I will be here tomorrow. Thanks for listening. It's Jason Bible, Texas Real Estate Radio Network. All right, guys on Facebook, thanks for watching.